Okay, it's 3 o'clock. Let's start. Dmitry, you are ready?
Let's do it.
Cool. Thanks, guys and ladies, for joining us. Dmitry and I, we have been doing this for a number of times, every half a year. So the guys at the Cento team put together a report that looks at what has been happening in Southeast Asia as far as tech investment is concerned. So Dmitry will explain, which installation this is, but essentially we look at the first half of this year, 2021. So we prepared this briefing. It's 1 hour, and we will try to cover as much ground as we can. It is not just a simple walkthrough of the report, but we try to group things in a little bit more thematic manner. So we have reserved some time for questions. If you have anything that you want to raise, anything that you want to discuss, you want to ask, please feel free to leave a message in the chat at any time, and we'll address that towards the end of this presentation. Okay, let's go. A little bit about who we are. My name is Jianggan. I have been running Momentum Works since 2017, and before that, I was with the Rocket Internet, running companies including Easy Taxi as well as Foodpanda. So one thing I have in common with Dmitry is INSEAD. Of course, he was there much earlier than I did. Dmitry, you want to give a little bit of introduction by yourself?
Sure. Russian originally, in Singapore since 2005, part of the team behind Cento Ventures. There will be a couple of slides about us later on, but I'll just regale you with the details now. We focus on Southeast Asian early stage companies that derive most of their revenue from Southeast Asia. We focus on helping founders build category leaders, have been trying at least to figure out how to do it since 2011. And we've been occasionally spotted to be, we've been noted to be rather obsessive about numbers and research and insights and figuring out reality on the ground.
Conference,
Somebody off mute, I think. So yeah, and today, so we're kind of known for attention to details and avoidance of high-level narratives. So I'm here today to spin some high-level narratives together with Jianggan.
Okay, a little bit more information, but this will be quick about Momentum Works. So we started in 2017 as a venture outfit. So we have been building a few companies, fortunate enough to manage to sell one at the beginning of the pandemic. And we have also been building community as well as insights on top of that. So we have been doing a number of reports, especially this year when people have a little bit more free time and during the pandemic. And we have also been blogging. So you can follow our blog, the lowdown.momentum.asia. I think one thing we are super proud of is the team as well as the community. So we do have a working experience in pretty much most of the continents. I myself, I have worked in Southeast Asia, China, India, a little bit in Europe, and a little bit in Latin America. So together with the community, so we like to put things together and try to understand what's the deep logic amongst all the things that's happening with tech and digital economy in Southeast Asia, but also benchmarking that against other regions that are booming at the moment. So this is some of our reports, and so if you want more, you can get access at insights.momentum.asia. We have also posted the report that we're discussing about today, the tech investment first half of 2021. So you can get a copy there as well. It's free. Over to you.
Well, so this is us. And if you would just transition me to the next slide. We've also been doing a little bit of report publishing, a little bit less colorful than Momentum Works, mostly dry numbers, counting dollars and cents. You can find it all on our website, and I think first half of 2021 also on Momentum Works website. Next slide features a few logos that we've been lucky enough, logos of companies we've been lucky enough to work with for the last decade, and that's really us. Back to you, Jianggan.
So we hope you you can hear something interesting today, which is a little bit different from what you usually hear at conferences and seminars. And we try to make it as candid as possible. Of course, it's still a public arena. So again, as I said, I mean, any questions, please just leave it in the chat. The four major topics we're going to cover today. First is obviously about numbers. Southeast Asia's tech investment has been trending upwards, but big deals have been going down. So what's happening? This is something that we'll be addressing as the first topic. And second, we look at the trends in different sectors. And obviously, I mean, lots of things changed since the pandemic. Certain things are accelerated, certain things slowed down. And we will also look at fintech specifically because that seems to be getting most of the attention, buy now, pay later, et cetera, et cetera. So we also made an interesting narrative about, I mean, how to make a unicorn in Southeast Asia, especially in the year 2021. So hopefully you will like it. And the last, we will do an overview about, I mean, what might happen next for the region in the context of all this changes that are happening globally. So let's get started. So first we look at Southeast Asia tech investment in 2021. So more details I didn't report, but here I think Dmitry will go around through about some of the key highlights.
Sure, let's try to keep it brief because it's relatively dry numbers. As the loyal viewers of this podcast know, we do try to go a little bit below the surface and see what are the real underlying drivers of the dollar volumes that are going into this region. One useful cutoff point we use is $100 million per deal. We would consider transactions that are worth more than that to be mega deals, relatively irregular, and everything below this to be product of the standard capital formation stack, your series A, B, C, D. And we like looking at the numbers that these two groups of deals generate separately. And as you can see, the series A, B, C, D stack has been plugging along in a relatively reliable fashion, ticking up a little bit. That would be the orange line. But as Jianggan mentioned, something seems to have been happening to mega deals since the heady days of, what was that, early 2018. So the first round of, how shall I call them, local services wars, which then became super app wars, which then became wallet wars, which is now neobank wars. It looks like these companies are not taking as much capital anymore, and not quite so many mega deals are happening in other verticals, not yet anyway. And one does have to mention a couple of nuances of our methodology because some of the publicly available sources might tell a slightly different story. So the way we do numbers ignores capital raised in public markets. We do consider it to be a rather good development that C and Bukalapak can take billions from public market, but we just can't figure out how to calculate it all because much more than just Bukalapak and C group is happening. We also do not count debt deals, even though it would be quite fascinating to see Southeast Asia's combined balance sheet and what local tech ecosystem borrows and lends. We do not know how to do it without Interpol red notices. And we also, and somewhat controversially, and we'll talk about that later in the conversation, do not quite consider every large company a unicorn. We do prefer to focus on companies that derive revenue from Southeast Asia, that have tech as their core competence, and a couple of other parameters that we'll discuss later. Having said all of that, maybe some of the drop-off in mega deals, especially early this year, is just the result of the timeline cutoff. As we know, in Q3, there is at least another, what's that, 1.3 billion coming down the pike, and Q4 is looking equally productive. So the gray line might recover and show us something like a 2.6, 2.7 in second half of this year. We shall see. And now if we were to switch to the next slide, let's look a little bit closer at what happens inside that orange line, the one that I refer to as the standard capital formation stack. So as you can see, things below 10 million per deal, that's where Cento lives, keep ticking up. The ecosystem seems to be quite nicely populated by investors. Everything else is trending steady. If you look at the details of the underlying numbers a bit closer, the most active sector seems to be the $3 to $10 million per investment, so late A, early B. And that is all good and well, but then if we look at and let's look at the next slide at the result of all of this. If I could just ask for the next slide. This is our usual and by now rather confusing slide trying to keep track of some, not all, large companies in different valuation bands. Thanks to the workings of that orange line that I just commented on, we have the highest number of entrants into every band. And this slide is actually becoming rather hard to put together. At least 7, 8, possibly 9, depends on how you count, entrants into the wanted 1 billion plus category, and at least a dozen players that are pushing for that category as we speak. Also, interestingly enough, quite a bit of a change in composition of capital that pushes companies to the high bands. If I look just very quickly at Q3, which our numbers do not yet reflect, all of it is US investors, with a couple of Korean majors and SoftBank in the mix, which is quite unusual for Southeast Asia. And now, and one last caveat, I've just allowed myself to take a pretty large shortcut for the last 4 slides. I was talking about Southeast Asia at large. Of course, one has to be nuanced and look at things on a country-by-country basis. Interesting insights emerged that way. Jianggan, we didn't even discuss that before the call, but this half a year, the Philippines outdid Vietnam in fundraising. Who'd have thunk that in the last couple of years? And now let's look at the next slide.
We have been predicting that the Philippines would be taking off for years, and it seemed to be slower than we had predicted.
Yeah, but to outstrip Vietnam, that was not what I expected myself. So far so good for Southeast Asia, and things are ticking along steadily, but it's always useful to have a look at other emerging regions of the world and see how they're doing. And the word steady, I would say, does not apply. Things have been growing at a blistering rate, and it's not like they're going from the low base either. I think India India is far ahead of Southeast Asia, and I think Latin America, by total number of dollars taken in, is far ahead of Southeast Asia. So it's interesting to see that, and have a number of theories. It would seem that India has just completed transition to the next stage of ecosystem development. Africa seems to be going through the stage that Southeast Asia had gone through circa 2014. I think that's the last time we clocked this sort of numbers at this sort of base. As for LATAM, well, Southeast Asia and LATAM do appear on almost every metric we see to be neck and neck, whether it's user acquisition costs or whether it's sophistication of ecosystem. So what gives with the numbers for the first half a year? Well, I have a speculation that it is just easier for the US investors to fly to Latin America than to Southeast Asia. But Jianggan, maybe you will want to comment a bit more on that on the next slide, because you've been working for quite a while in comparison of the two ecosystems.
Yeah, I think those of you who came to our last briefing where we look at the year 2020, you'd remember that we did a full slide comparing Southeast Asia and Latin America. So there are lots of similarities, as Dmitry mentioned, in terms of population, in terms of how basically the countries are distributed, right? I mean, 6 major countries, and with the largest country having population between 230 to 270 million, etc., etc. And with the regional hub in Southeast Asia's case, Singapore. In Latin America's case, is Miami. So there are lots of similarities, and I would say that Latin America's ecosystem was a little bit behind Southeast Asia for historical reasons. I mean, even if we look at the mega companies in Southeast Asia, you have C Group, you have GoTo, you have Grab, which were founded around 2009, 2012, and in Latin America, I mean, aside from Mercado Libre, which has been an so public e-commerce company for a while, and you only have Nubank, which has achieved significant valuation. But the overall narrative is that, I mean, if you look at how things have been progressing, how capital have been moving across the globe, right? I mean, you have things in the US which have evolved through multiple generations, and you have the opportunities in China, which was very well exploited by different capital sources. You have generations of companies that have been formed. What's happening here is it's increasingly difficult to find make opportunities in China, and obviously some people also attribute this to the government crackdowns, but from my point of view, I think it's the natural progression of the market. So capital and now is increasingly global. They are moving to search for the next big opportunities, and I think naturally Southeast Asia and Latin America are on the radar. And as Dmitry said, right, these two regions are more ready compared to some of the rest. Anything to add?
Let me take this opportunity to provoke you into doing that thing we've been promising each other to do, which is do a proper research on the side-by-side comparison of LATAM and Southeast Asia. I think the time has come, and it will be very interesting to see category by category where each region is and what role each country plays, seeing how some of the larger Southeast Asian companies are going to LATAM anyway, about time. And let's invite somebody from Latin America to participate while we're at it.
I think much more sectors in LATAM. I think much more sectors in LATAM can be disrupted by Shopee, rather than the sectors here being disrupted by Nubank. But anyway, so we can look into that.
Just you wait. I think we should be prepared to be surprised by entrants from LATAM and from Africa in due time.
So one thing we looked closely at in this report is the different sectors, and obviously, I mean, by looking at the trend, you would see that, okay, which sector is attracting more capital, which sector is attracting less. You might want to ask about, I mean, what exactly do we mean by retail, business automation, and financial services? So the way we categorize this is actually quite simple. Many of the tech sectors are essentially looking at sort of transforming or enhancing an existing underlying sector. So for instance, e-commerce, the underlying sector is retail. And business automation, obviously, the underlying sector is how do we look at, I mean, how do we increase the efficiency of the business? And the financial services, we look at digital financial services to provide financial services in a different way and challenging or reforming the existing ecosystem. So if we look at this, and sorry, obviously there's also multi-vertical is what we see as super apps, and basically the companies which have occupied a certain user base through a single sector and now moving to adjacent sectors, and for obvious reasons of more efficiency as well as better customer retention. So what we look at last year is that, the first half of this year is that payment investment into payment has reduced a lot. And many of you who have been in Southeast Asia for many years would remember how hot payment was in 2019 and all this like discount and the cashback wars in Indonesia. So finally we see payment starting to become mature. So we'll have one slide actually talks about that. Travel and hospitality. I don't think we need to explain that. I mean, in the beginning of this year, people were more optimistic, but as the Delta variant came in April, May, things become a little bit different. I think countries are still recovering from this. Although, I mean, at middle of October, when we look at things, it looks to be optimistic again. Real estate and infrastructure, I do think there's a bit of correlation with COVID as well. But looking at the winning sectors, we actually have a little bit more detail. The amount of funding that actually went into each of these sectors, and some of the sort of illustrations. Financial services, 340% growth from last year. Business automation, almost like 1.6, 1.7x growth. And retail, so we have slightly more modest 74% growth. I just I think we want to talk a little bit about financial services, since a lot of buzz is about that, and I think lots of unicorns being generated, minted, bred are actually in this sector as well, and many of the multi-sector companies, multi-vertical companies are also doing either financial services themselves or distribution of financial services. So there's lots of buzz in that area, and we have tracked lots of activities and in different sectors, but essentially when we summarize that, we see three trends. First, everyone's trading. Second, payments finally coming to fruition. Third, is about credit scoring, which is something that people have not talked about as much over the past few years when lending was actually going very hot. So the next few slides, I think I'm going to ask Dmitry to explain a little bit more, but let's start with the first one, everyone's trading.
I wish I could explain. I can only just comment and struggle to comprehend. And Richard, I see your question about payments and the drop. I'll address it in the next slide. On the first notion, the everyone's trading bit, well, happy days, Southeast Asia is now finally moving in lockstep with the rest of the planet. So the same trends of signature stocks and crypto investment that have struck larger digital economies have arrived to Southeast Asia in sync. So that's one trend. The other trend is that finally, the technology stacks and the cost of user acquisition have all led to emergence of a whole bunch of wealth management solutions. I didn't actually quite expect Southeast Asia to have that much wealth to manage, but yet here it is. And on top of it all, the time for the deployment of that wealth, not just into overseas financial products, but also into local financial platforms has arrived, specifically into local exchanges. And so voila, we have about, what, $400 million invested into wealth management and trading platforms in standalone startups in the first half a year. But I also suspect easily $500 million is being invested into this capability inside larger platforms. And a very quick overview of what's happening. We have very storied, very well-regarded company called iFast has been doing that in Singapore, selling mutual funds to Singapore-based investors for the longest time. We have Gojek ecosystem bringing up companies like Pluang. We have a spectacular deal recently in Ajaib, and there is a fascinating confluence of crypto ecosystem, both locally built and relocating from mainland, like Matrixport. And Jianggan, much as you say that I should explain it, I really only understand maybe 10% of what's going on. What I can do instead is I can give a shout out to this interesting, well, my favorite podcast, the Fintech Blueprint, Lex Sokolin, and especially one of the latest episodes where they're interviewing guys from, let me try to remember, Alpha Fusion. It's a specialist research shop in the US that looks very closely at what happens to the fabric of capital market, like, for example, US stock exchanges or IDX, when a very large number of very small transactions start happening, facilitated by guys like Ajaib and being aggregated by them. And how does that change dynamics of pricing, and how does this change the balance of power between wholesalers and other players in the market? I'd say we revisit that in another half a year, Jianggan, once I had a chance to read up a bit more. But one thing that we already know for sure is that structure of IDX just after these brief few quarters changed entirely. Retail investors and their transactions are now a vast majority of what's happening in the market.
I think looking at Matrixport, looking at the latest 2 rounds of fundings of Ajaib, I mean, the latest was led by DST. So I see one thing is that, of course, now, I mean, in terms of trading, in terms of all this like assets speculative or not, we are in a pretty good market. Of course, these things go by cycles. And if you read the Financial Times every week, there's somebody commenting saying that if there's a downturn, how do you democratize that? But it seems that at the moment, many large ticket investors we see, they seem to be willing to not care about the downturn, and I think there's also a narrative that that the trading apps if you put them in the context of all the financial apps, a digital bank, buy now pay later, whatever. So there are two attributes of trading apps which stand out. I mean, first is that it's much easier to convince people to put money there, and the second is that people check that much more frequently, especially in a bull market. So of course, I mean, this is logic, and how that will play out. Of course, we have to see. I mean, how each player is doing that, and of course, there's also something to do with the regulators, because many of these things have not been actually regulated that much. If you look at what happened yesterday to Futu and Tiger in China, maybe something that people need to watch out for in terms of the risk of doing this kind of stuff.
Yeah, I'm trying to hold two views on this industry at the same time. One is that it's just like grocery deliveries was for e-commerce stack, high frequency, relatively low margin use case that you want in every platform to keep your users engaged. And the other view, I try to clarify for myself, but I'm afraid I'm dark enough to hold it, is that this is shaping up like the weapons of mass financial distraction if something goes awry. Between the architecture of these platforms and the regulators being asleep at the wheel. Let's see what the next crisis brings.
Second one, payment. You want to talk about that? I can add a bit afterwards.
Oh, sure thing. I think I just spotted the question from someone as to why you guys have been talking about payments. It declined in terms of investment. That's financial destruction. Yep. Now that's not even my quote. Somebody else came up with this a couple of years before. So on payments, I think the relatively small amount of investment going there, what's that, 80 million first half of this year, that's just an artifact of our timeline. We know that in Q3, at least 3 deals total of $500 million were announced that I believe have actually been done in first half of this year. But what's interesting here is that regardless of how much money falls into this particular quarter or half a year, 3 things are changing at the same time: the substance, the structure, and the perception of the sector. On the substance front, COVID did wonders to the volumes of digital payment processors. There was first a bit of a shock when the entire travel industry went out of existence for a few months. But just about every other sector caught up and digitized its payments flows quite rapidly. So if you look at the total processed volume by large processors, it's spiking through the roof. McKinsey just published a report yesterday on the global payment volumes, quite a good read. Structurally, so this is not necessarily a 2021 development. This development has been in the making for what, half a decade. But it looks like now every government in Southeast Asia is seeing the success of UPI and the relative success of prompt pay in Thailand, and call them local switches, call them local clearing houses, call them fast payment systems. They're all coming into existence. I would call it the invisible investment into payment facilities that local governments are executing by building systems and by, more importantly, passing legislation that says bank transfer to bank transfer within the country should be free, and let's stop paying tax to Visa and MasterCard. And on top of it all, we have a bit of a perception change. I do remember conversations with a bunch of investors into payments a few years ago. And I think the working theory at the time was wallets are the future. Why is it the future? Because China. So we've collectively funded 800 or 900 of these things, according to Nomura's research. And now suddenly we all seem to be coming to realization that wallets are just another kind of merchant, a relatively specialist one, the one that has a bunch of other merchants hiding behind it. And somebody still needs to do the hard work of taking value from the consumer's hands and putting it into the hands that hold the value on behalf of the wallet. And so much more attention is now coming to the role that players like Adyen play in the ecosystem, or to C2P or Stripe or Cento. So I would imagine the next 2-3 quarters in payments universe in Southeast Asia will be very exciting, as we already saw from Neom, from Cento, from a ton of buyouts like GHL, like IP88, like Coda. I think something else that I'm missing has happened recently. Pretty chunky deals have been dropping every couple of weeks. Back to you, Jianggan. What do you see? Are wallets still the future?
It was interesting. You mentioned that the wallet is the future because of, well, it was perceived as a future because of China. And but we look at, things in China, people don't really talk about wallets. I mean, if you think about Alipay and WeChat Pay per se, they're not necessarily wallets. I mean, people do not really top up much money into the wallet. Essentially, they take the role. I mean, they take the role the whole ecosystem, right? From the issuance to settlement to acquisition, and sometimes, I mean, initially with their own ecosystem, and increasingly with merchants online and offline. So they created everything. So quite often you see digital payment, wallet companies in other regions outside China when they talk to global investors, and the narrative is always that, okay, we are like Alipay but minus this, or we're like WeChat Pay but minus that. So, but essentially there are many things which were unique in China, which enabled things to happen. Banks doing all the KYC, and all the urban residents have an account which links to a phone number which has been verified by the bank, so that you can onboard people very quickly, and the legislation allowing you to take certain money out of the bank account without any service charge. So that solved the cash-in problem, which I think many of the wallet players in Southeast Asia are still struggling with. I think that this is also MDR, right? I mean, because they are the merchant in a way. So I think things are a bit different. And when I first started talking to people about wallets back in, I think 2015, 2016, there's one issue which many people are talking about, but nobody was able to address, right? I mean, how to get all the cash into your ecosystem. And now you see the players going to build banks, et cetera, et cetera. So, but I think the dynamics are very different from what we see in China. What is interesting, maybe Dmitry, you can also look at is on the top right of this slide, what countries have been building, I don't know how to call it, switches, clearing houses, exchanges, whatever Alipay did in China. Yep. Yeah. So you also see that. I mean, I think that's something you mentioned about not paying tax to Visa and MasterCard. But also in addition to that, you see efforts to try to enable cross-border settlement in that way. I think there's small trials between Pay Now and Prompt Pay. There's trial. I think there's also recent trial between Pay Now and Do It Now. So how this will work out? Interesting, because in the past multilateral things were pretty hard.
What do you mean small trials? I can send money to Thailand for free instantly right now. Hello, remittance players, bank account to bank account. So it's happening. Southeast Asia is actually integrating slowly but surely its fast payment switches. And I think what we are looking at here is not China, quite obviously, not even India. I think in a strange way, we are going after a European template, slowly, haltingly, but that's where we are going to end up. Hence my mention of ADN and how they solve for the European ecosystem.
Move on.
Sure.
Next one, credit scoring.
Yeah, that one is a product of some debate between our team and Jianggan and his team, because so much is happening in lending. And it's really hard to put it into one slide. We actually looked at the numbers of how much money has specifically gone into lending sector in the first half of this year, and I was surprised. It wasn't much. It was, if you carve it out correctly, maybe a couple of $100 million all in, business and consumer. Now, we have to make several major caveats here. One is that there are a couple of noisy emerging business models, buy now, pay later, early wage access, advanced wage access, that occupy a lot of media space, but their take-in of capital across multiple deals is actually not that large. We should mention that a ton of money is being invested into lending within platforms where we cannot see them. And we should also call out our own internal methodological confusion, because we are starting to break out banking services and neobanks and challenger banks into a separate category from just direct consumer lending or business lending. So our numbers might be a bit off, but it does feel generally that after COVID has, I wanted to say put paid to repayments, but no, it didn't. After the repayments became rather slow and difficult during COVID, after regulators introduced moratoriums on repayments of loans, after some of the peer-to-peer industry being cleaned up, it looks like Southeast Asia took just a bit of a pause on lending platforms. And now the region is loading for the bear. Number of neobanks with more capital than they can lend, number of major capital pools allocated to advance AI and to grab financial from major banks, it's quite staggering. And organically, therefore, folks with good credit scoring capability are coming to the fore. Cento has had a spectacular IPO in Malaysia, very criminally under-publicized. So a big credit bureau that Creador took public with very good results. And Advanced AI, I'm not entirely sure how the market sees them. I guess mostly what is being seen is Atomi, their buy now, pay later. But what I see in this company is primarily a fantastic credit scoring capability and data collection capability. Can't remember the name of the unit right now. I think it's Sentinel. Something similar must be hiding inside Credivo. I'm not as familiar with that business. And Jianggan, you have network of spies inside C-Money, don't you? So you know a little bit about their credit scoring efforts.
So obviously that you see now buy now pay later is super hot, and if you look at, I mean, what Fintech and Advanced AI are actually selling to investors globally, and a large part of that story is buy now pay later. This is very different from the previous cash lending that many have been doing, in a sense that the interest rate that you can charge and the fees you can charge is actually much lower. And as the sector became more competitive, the customer acquisition cost also becomes higher. So for you to, I think Fintech and Akulaku would have, I don't know, 40 million sort of downloads acquired in Indonesia. And imagine for you to acquire that many downloads now, it's much more expensive compared to 2017, 2018. In terms of the data they use to credit score, I mean, coming from China, I'm actually struggling to understand actually those guys who do not, I mean, have access to e-commerce platforms directly. I mean, the likes of Shopee, the likes of Tokopedia. So the attributes, the different dimensions of data they have would be rather limited compared to what Shopee would potentially have, right? I mean, even if you are plugged into the e-commerce platforms, you probably only know, I mean, how much is being spent and when, and maybe a little bit about customer attributes, but not about, I mean, whether you are spending on white socks or black socks, and what exactly are you buying, and how's that trending over the month, over the years. If you look at Alipay and Tencent's payment system, when they do lending, they have, I mean, tens of thousands of lines of attributes which they can use to attune their data model. I do think that for consumer lending in Southeast Asia, nobody would have that richness of data compared to the e-commerce platforms, the big e-commerce platforms. So, but that doesn't mean that they don't have room. I think the room for lending is huge in the region, and we will probably still see other business models coming out as well.
So while I'm sure predictive power of the color of socks is going to be the next level, but right now already, if you speak to guys at Experian, and there are many industries in Southeast Asia, if you talk to guys at Cetos, they'll say that, look, 300-400 parameters for a thin client, for a thin file client, collected from their phone, the public databases. It's not much, but it's good enough to move the needle and to open up another 5, 6, 7% of population to lending. That's already gigantic. So yep, that's what's needed to advance the frontier of what current banks and private lenders are capable of reaching. After that has been explored and mined, then yeah, the next level, then perhaps color of socks kicks in, but not quite necessary yet.
And I do think that the credit scoring capabilities are relatively not that hard to acquire, but having all this data sort of figured out, properly tagged and stored in one place, and also getting the right people to do it. So I think that's something which probably differentiates some of the guys which are doing it better than others.
I don't know, I might actually just disagree with you there, because data collection seems to be relatively straightforward until local governments wake up and start actually kicking people out from users' mobile phones for being too nosy. There is a fair bit of adversarial API building going on, which is to say basically scraping data from everything that moves. So inhaling data is not that difficult, and there is a lot of data out there, even though some should not really be collected. But making sense of it, not just creating the credit score, but validating it, figuring out whether it actually makes any sense to use this signal for that particular type of consumer, for this particular financial product, that seems to be rather difficult. That's why I guess we have entire teams from Ukraine and Poland and China moving in here, setting up credit scoring shops. Doesn't seem to be trivial.
Why do you think that's the case? That making sense of the data is difficult? For me, it seems to be an experience issue, right? I mean, if you have not done it extensively, you naturally do it more slowly compared to people who have been doing that for 5, 6, 7, even 10 years.
Learning cycles are slow because you have to put together a data score. Then you have to feed it to a reputable financial institution. You have to lend to tens of thousands. You have to see how they behave over time. And then you have to understand which factors actually mattered. So it's not just data science, it's also continuous experiment. It just takes a lot of time and volume.
Cool. How about the banks?
What about them?
What are they in this whole ecosystem?
Well, they launch small parts of themselves into under a new brand, call it challengers, so fast attack boats or whatever the trade name of that is. They trust capital to big fintech platforms. Standard Chartered just announced their deal with Advance. They sprout corporate VC arms. And then there is some commercial bank that did something just now with its corporate structure that I still can't understand. So maybe you can enlighten me.
No, nothing more to entirety. Let's move on to the next one. So another thing which we find quite interesting is that there are really different ways to try to enable, empower, eventually lend to different what we call micro, small, and medium enterprises in Indonesia. So we have seen numbers floating around saying that there are between 60 million, 64 million, and 67 million MSMEs. Interestingly, that number corresponds to almost exactly the number of households in Indonesia. So based on the last census published by the government last year, there are 67.5 million households in Indonesia. So basically, by that logic, every household is a small enterprise, and we find that number uplifting. So there are really different ways from sourcing, from bookkeeping, from what big platforms trying to provide a full suite of services, from modernizing the war rooms or mom and pop shops, and from some of the social so-called social commerce startups, which provide different ways of for people on the ground. Many of them are owners and small merchants to resell. And if you look at lots of activities on e-commerce, it largely trends to resell as well. And that's not all, right? You also have the different agent networks, which in my opinion are trying to address the same issue, which is distribution, and how do you sort of enable the endpoint that is distributing. So of course, we have 64 million MSMEs, and whichever business model you build, initially you can actually grow the numbers very fast, and that attracts capital. But this is also essentially a very competitive area. And how do you transition into say lending eventually? And many of them are actually already offering credit terms, which in my opinion is already one sort of lending that they're doing to these merchants. So how exactly things will pan out, and amongst all these players, and how much room there is in the future, and who would eventually win. So this is interesting thing to keep watching. Dmitry, what do you think?
This is such an interesting confluence of multiple industries. We've been struggling to even define it in our internal process. What is it? Are we talking about fintech here? Are we talking about automation of retail? Are we talking about new payment infrastructure? It's all over the above and more. It sounds like a few well-established families in Indonesia that have been in the business of distributing FMCG to the many islands have found that there are ways to realign this market and capture a bit more market share if you use slightly more advanced technologies in your chain connecting the manufacturing facilities or the import facilities to the final distributor. That seems to be the driving force, but there are so many interesting second and third tier effects. I'm not entirely sure if availability of Procter & Gamble goods in this Java will ever improve thanks to this industry, but I'm pretty sure that bill payments will change. The way accounts of small and medium enterprises are done will change. Terms of access to trade credit will change. So it's one of those developments where industry and the VCs invest into one thing and inadvertently change 20 more on top of it. Good fun. Can't wait for this to start in the rest of the region. Vietnam already sees that grocery is obviously on fire in the Philippines. Let's see what happens in Thailand and with CP Group's footprint.
And also, this is something that we struggle to find a benchmark in China. And obviously, nobody's as excited about the number of sort of small, medium enterprises in China, but the big platforms, Alibaba, JD, etc., have been doing multiple things to try to do the to try to enable the endpoints. And the most recent trend that you see in China is the community group buy thing, which obviously, if you read the headlines, it's all about, massive investment that plunges Meituan from being profitable to making a loss, etc., etc. But essentially, if you look at what they are doing there, it's in a way similar to this. It's about building a distribution and fulfillment network that would enable different opportunities, and how that opportunity would exactly enable afterwards, in addition to just distributing goods. I think there are different possibilities, but it's a bit hard to predict. So on that note, we actually have a report that's been cooked up. So we will look at the different business models. We're trying to define the different pathways, and maybe insert a bit of perspective to see which pathway is more viable, and which pathway would probably transpire into something different.
And to William's question in the comments is, how long will it take for all the significant number of Varroons to be replaced by modern retail? William, I've asked exactly that question of a few friends who do VC investment in Africa. I hope some of them are in the audience. And the answer was, at a certain GDP per capita, possibly never. And therefore, some of this investment into semi-professional individual sellers who might, under a certain angle, look like a small store, might actually be not a flash in the pan, but a long-term investment thesis. But it's a bet on most of rural Indonesia staying relatively poor and not within reach of 7-Eleven at the nearest corner.
Okay, thanks.
In 2016, I was with a bunch of Chinese investors in India, looking at why there aren't like convenience stores as prolific as China in India. So we spent about 3 weeks in India, and one of the conclusions we drew was that in China you have had the old neighborhoods been torn down, and people have been shoveled into high-rise communities. So that puts many of the old sort of mom and pop shops into a almost similar sort of cost structure compared to the convenience stores, right? They have to pay the rent now, compared to the past where they just occupy a space, and of course, because of the now retired one-child policy, they don't have 3 or 4 sons to do the free delivery for them.
Well, to wrap it up on the perils of cloning business models from China, I think it was Ray Ma, Tech Buzz China, in one of the podcasts on the endless topic of 3rd and 4th tier cities and Pinduoduo. She made an observation. I hope she's in the audience too. Hello, Ray, if you're there. That everybody in Indonesia and India got really excited about the theory of 4th tier cities in China and how they adopt Pinduoduo strategy, Pinduoduo solution. But there was a small nuance. 4th tier city in China is the size of San Francisco and has a cluster of skyscrapers. So an auntie who distributes groceries up and down the high rise might be able to reach 200 households with just the use of an elevator. a fourth-tier city in India and Indonesia is a slightly different picture in terms of consumer density. But hey, all good. Bill payments become more efficient.
Shall we look at unicorns?
Could we not? Okay,
Yeah.
if we must.
So that section should be relatively fast, and we look at the number of unicorns that have been minted, bred, or cooked up in Southeast Asia, and it's really exciting, right? I mean, every week we see somebody either declaring themselves a unicorn or being declared by somebody else as a unicorn. And of course, we will look at all these activities. We suspect there are like 30 to 50 unicorns or massive companies with the tech potential, which are not being declared. So we did a little bit of summary on the different ways to build a unicorn. So I'll quickly go through that. And Dmitry, if you have any comment to add, just feel free to.
Will do.
First way is the conventional method, that you go from seed to Series A to Series B, maybe Series A plus, Series B, pre-B, whatever, and gradually increase the valuation, build a business, and sometimes, I mean, sometimes valuation comes faster, sometimes business metrics come faster, and eventually become a unicorn. So that's the way we understand. That's the conventional way. And of course, there's a faster way, right? I mean, some companies just exploded and became unicorn very, very quickly without going through multiple rounds of funding corresponding to the level of growth. And do you want to talk a little bit about the scam Avis and Amanotes?
Haven't learned nearly enough about them. Guys who've built it all in the Philippines, or rather in Vietnam and the Philippines and France. I have a terrible feeling they just invented online casino, but legal, because it's not fiat that is being won, but cryptocurrency. There is, however, beyond this commentary, a much more interesting stuff happening underneath if they can get the macroeconomics of their new economy under control. And that's really all I can say on this. That, and it's quite amusing that all of us here are doing VC for 10 years with the company that funds this is Andreessen Horowitz. Boom.
Yeah, I've heard that narrative many times, that I've been following company for 3 years, then this other company which just came out of nowhere and the valuation is the same as the company I've been following for 5 years.
Interesting story, really interesting.
The third, which is I think relatively straightforward to understand, some companies spun off or bred from a corporate and a separate entity, and of course because of the support they get, and because the funding they get, it's not that hard for them to actually become sizable enough to be comparable to a unicorn. So I don't think we need to explain too much about this. The third method, which is what we call the Delaware way. You want to briefly mention about it?
Oh, well, it's all very good and well. Singapore has been building this capability for decades. So quite a few interesting companies choose to set up their headquarters in Singapore, sometimes formally, sometimes actually building a team. And that can only be encouraged. That enriches the ecosystem, that makes Singapore stronger. However, then we all of a sudden have revenues, traction, and fundraising rounds that have that reflect signal from completely different regions of the world being added to the stats in Southeast Asia. And it used to be a small distraction. And now I think it's a sneaky extra $1 billion to $1.5 billion a quarter. If you look at some of the reports about how much money Southeast Asia raises, and if you add up all the numbers from companies that may not even know they're Southeast Asian, that adds to extra $3-4 billion a year, perhaps. So I will possibly write an article about this at some point.
Go ahead. Number 5, stunt, issuing 1 billion shares and get someone to buy 1 share at $1. And of course, the funders are usually very presentable. We should not go into details, but for people who are in the region, you probably know which companies would fall into this category.
Surely it doesn't happen anymore. Surely a matter of 2014.
So, duck test. Quickly, you want to talk about this?
Oh, well, it's actually a pretty interesting topic, because what is really truly a technology company? There is no proper definition. I have mine, you have yours, but one has to draw a line somewhere, right? So there would be, I think, let me offer you my conspiratorial theory. When Southeast Asia has 3-4 major technology companies, it is quite hard to claim you are the 5th. Once there is 20 or 30 or 40, it's relatively straightforward to join the crowd. All you need to do is you need to take offline traditional business, but fast growing, hopefully e-commerce adjacent or something like that. So it shows nice growth numbers for a couple of years. And you talk a lot about underlying technology, and you possibly build an app. And sometimes you can actually get your PR and your recruitment supercharged because the ecosystem thinks for a while that this is one of the technology majors. It's not good, it's not bad, it's just an interesting tactic that it's not new, has been done many times before in the rest of the world. And one needs to be aware of it when parsing data and plotting one's strategy.
The tactic is used for as far as recruitment is concerned, at least for a short period of time. And afterwards, it really depends on the essence. Last way, the iFast way. You want to talk about that?
But this one is just really interesting. This is how things are supposed to be. A company goes public after a little bit of capital taken in, and then after time, its metrics and its performance is appreciated by public market, and it grows its way to Unicorn Club. So it's rather amusing and a little bit sad that this is the one and only example in Southeast Asia we've been able to find of this path. Hopefully more to come.
So that's also related to the topic that people have been discussing about democratizing access to early unicorns or unicorn 2Bs. Anyway, last section, what's next for this region? And so obviously we have been hearing a lot about what's going on in China, all these crackdowns. So President Xi is trying to reform the whole society. And of course, during that process, there are casualties and sometimes the whole sector in the case of online education, and maybe in the case of online training as well. If whatever happened yesterday is going to have to become a full-blown out. And of course, this narrative that because of that, I mean, many of much of the money is actually moving to Southeast Asia. We have seen sort of people interested in this area, people actually assessing this area. But I do believe that whatever that's happening in Southeast Asia, the effect of this is still too early to be seen. So last year, people predicted that the supply chain will move. It didn't. I would argue there's something similar there. And what we do see as the increase of capital is driven by other factors rather than this. And also globally, there has been a bit of a regulatory backlash against the tech in different ways. You look at the bans in India, which interestingly left Garena as one of the biggest winners. And if you look at, I mean, all these hearings in the US and the regulatory actions in Europe, I mean, some of you might get it. So where does Southeast Asia stand in this? The questions we don't know yet, right? Because it's made up of like different economies and with different incentives, and also in different sectors you have different regulators. So try to predict that has been actually quite difficult. Yeah, go ahead. You want to say something?
Oh, just a thought that technology companies have to be somewhat large for the politicians to get points for bashing them. So I think we're approaching that point in Southeast Asia. So prepare for some bashing.
So an additional point is that, I mean, you look at some of the Southeast Asian companies, or some of the companies which were born and grew up in Southeast Asia. Now they are going global. Many of you have been following what Shopee has been doing in Latin America, where they really don't see Mercado Libre as a viable competitor. They are going to Europe, launching Poland and Spain, I think, and maybe soon to enter France. You look at GNT; they are following the footsteps of Shopee in Latin America, but also they're quite aggressive in expanding in the Middle East. So interestingly, I hear from people on the ground saying that, okay, this company is going to different regions, and of course many of them are funded by the Chinese community, but they are much more competitive in effectively managing local teams and localizing their product leadership organization compared to Chinese companies coming out. So this could become very, very interesting forces in the next few years. Last point, what do you think about the investor perception in Southeast Asia? So these two images, first is Forrest Li in 2014 when Garena first became a unicorn, and nobody knew about unicorn back then, the term. And also 2014, the Thummer brothers, which had started Rocket Internet, became billionaires. But from then to now, what has changed?
Is that me? Oh, can't speak for the globe. I do get a bit of a view from some of our investors, especially in Europe and the US, Collective West, that Southeast Asia is now seen as the last, maybe perhaps apart from LATAM, a sizable unregulated frontier where some of the more sharp-edged business models are still possible, while in Europe, and India and China, they might already be seen by regulators. That's one perception. Then there is the perception of another LATAM a bit further to fly. Oh, perceptions are many and they're shifting all the time. I think by now, the one thing that I am not hearing from anyone apart from you and a couple of other astute observers of the ecosystem, I do not see folks looking at Southeast Asia as a place of origin for companies that can take on the entire global emerging markets community. And yet that's happening. And we already have 2, 3, 4 cases. I hope to see that perception to emerge in the next couple of years because Forrest has shown the way.
Yep, and as we do that, of course, this was some of the predictions we did this year, and we are 2 minutes beyond the schedule. I don't think we have time to take more questions, but you know where to find us. hello@mworks.asia, team@cento.vc. I hope you have found this session useful, and we'll be doing that once every half a year. But during the meantime, any questions, any discussions, we're always happy that if you can drop us an email.
You sure we cannot take any more questions? You have to run.
We have to run, sorry. Yeah.
Okay,
yep, but
then I see questions that were posted in the chat. Let me see if I have anything interesting to say to those, and then I'll find our guests and I'll answer them. Cheers! Yeah. Thank you for having me, Jianggan.
I think the questions have been copied. So whoever who asked questions, we will find a way to track you down and give you the lowdown.
Did not sound menacing at all. Thank you all.
Thank you.
It was fun.
Bye bye.